In a stunning turn of events, Intel Corp has seen its stock surge by an impressive 28% just this month, translating to a whopping $25 billion boost in market value. For long-suffering investors who've held onto their shares through months of uncertainty, the recent rally feels like a much-deserved victory. But here's where things get tricky and potentially concerning. Intel's valuation has now skyrocketed to levels not seen since the heady days of the dot-com boom over 2 decades ago. What does this mean for the tech giant, and is it sustainable? Let's break it down. For those unfamiliar with the dot-com era, imagine a time when optimism around technology companies reached fever pitch. Investors were throwing money at any company with .com in its name, regardless of whether it had a viable business model or actual profits. It was a period marked by both incredible innovation and reckless speculation. Fast forward to today, and Intel, a once dominant force in chip manufacturing, is finding itself in similarly uncharted territory. The recent spike in Intel's stock price isn't coming out of nowhere. The company has shown signs of progress, including efforts to regain its competitive edge in semiconductor production. However, the magnitude of the valuation increase raises eyebrows. Is the market truly reflecting Intel's current performance and future potential? Or are we witnessing another wave of irrational exuberance? And this is the part most people miss. Valuations aren't just numbers on a screen. They carry real-world implications. A sky-high valuation can set unrealistic expectations, putting immense pressure on management to deliver results that may be difficult to achieve. If Intel stumbles even slightly in meeting these inflated forecasts, the backlash could be severe. Remember how quickly the dot-com bubble burst? That's the risk lurking beneath the surface. Well, let's take a step back and consider the bigger picture. Some analysts argue that comparing today's market dynamics to the dot-com era might be oversimplistic. After all, Intel is no fly-by-night startup. It's a seasoned player with decades of experience under its belt. Could this valuation reflect growing confidence in Intel's turnaround strategy rather than unchecked euphoria? On the flip side, skeptics warn that history often repeats itself, and lofty valuations tend to correct sharply when reality sets in. So, what do you think? Is Intel's current valuation justified given its ongoing transformation efforts, or are we heading toward another tech bubble? This is one of those moments where opinions will likely diverge sharply. Do you believe Intel can sustain this momentum, or is the stock teetering on the brink of a major correction? Share your thoughts in the comments below. We'd love to hear from both optimists and skeptics alike.